Hey traders, welcome back to China Do Trades. Today I'm just going to do a quick video on the trade I took on NDX. I'll go over the market structure, my entry, my exit, what I was looking for in the trade, how the trade is similar to my trade style and how it fits me. I'll show you guys sort of the risk management towards the trade as well. And lastly, the outcome of the trade. As you can see in the video title, the trade was successful, but I want to show you guys why I took the trade, what I was looking at in the market, and essentially how the trade ended up playing out. So of course, just got to let you guys know this is just for educational purposes only and, for information. I like doing these because I honestly get to review the trade in my head and walk you guys through what I'm seeing while I take the trade. So it helps me just as much as it's helping you guys, right? So let's go into the market structure and why I took the trade. If we take a look at NDX on a daily time frame, we can see that we're just around all-time highs and we're at a previous resistance level, right? So previously in the market, this peach area was our resistance. Essentially, after price came to this 22,200, 100 area, we fell down. So essentially, my bias right now is already thinking, okay, we might reject this level, right? So I'm already thinking short. So if we take a look into my entry, my exit, the call credit spread, where I had to break even, you can see that I had my break even around the highs of the day. So if you just see by the price action, when price opened, buyers cannot continue bringing price higher. So we essentially continued to fall. We continued to fall and we came to around a support level. So my bias right now is already thinking short, right? I'm already thinking if I do a call credit spread, which is essentially bearish bias, I'm thinking I can have a break even near all-time highs or near the high of the day, and I can let this trade expire out the money, right? So if we take a look at the trade I took today, essentially I took the trade at 10:03 where I sold a credit spread. I only sold one for around $260, and at the end of the day, I bought the trade back. I bought the spread back for $20, so around $240 on this trade, around 4 hours to take. So if we just take a look at the price action for the trade, you can see how as we continue to fall and we retrace back up, we didn't retrace above probably the 60% level. So throughout the trade, throughout those 4 hours, I was able to exit around the second red candle and entered on this first one. And essentially, with data decay and price being out the money, I was able to buy back the credit spread for 20 cents, collecting the $240. So first, you can, just to break down the trade, essentially, I'm starting with market structure, where we are in the market. Are we near support or resistance level? Which in our case, check, we were at a resistance level. Jeez. So first, we were at a resistance level. The trend of the day was already going down. So my bias is, okay, go short. You see how we ended the day as we continue to go back up, but I exited the trade for the day. So this is a real life and pretty good example of my credit spread trading. Really simple, and you give yourself a lot of cushion. So essentially, even how price ended up right here, we shot back up during the day. If I take a look at a 30-minute chart and I go to the trade, even after this huge price increase, I was still able to collect the full premium on this trade. Even though I sold before this big price increase, but I would have still been able to collect a full premium because I have so much cushion. This is where my break even is. And if we just take a look at the risk portfolio, essentially I just took the same trade, right? So this is the trade I took, and the red line before is the same trade, just analyzing it. So the risk here is, if I was wrong on the trade, I could lose $740, and the max reward is 260, which is how much I sold it for. Essentially, I will never, well, I try not to get the max loss, so I'll sell let's say I'm wrong on the direction, I'll either wait until price crosses my break-even price, or if I'm down around half of what I'm trying to collect, right? So I'm risking 700. If I'm down 300, 350, I might sell. But in this case, the trade went in my direction basically the whole time, and I was never in real danger. I think the next step for me is about scaling this up. So as opposed to just taking one trade, make this 2, make this 3, right? So as opposed to collecting 240, I can collect $400, $600. I think the thing there is just, I will be adding on a lot more risk, right? So if I do 3 contracts, it will be $2,100 I could lose to potentially gain 720, right? Which is sort of that like 33% ratio, like risking $3 to make 1. So these are all things that I'm going to consider, but for the time being, my strategy has been working and it's made me profitable. So I'm just going to keep at it. And this is my trade review for NDX. If you have any questions, comments, want me to explain credit spread, spread trading, all this stuff, just leave a comment, leave a question, and I could probably make a video for you guys. But yeah, until next time, deuces.